Hi, Mr. Ledger. Sorry to see that you've fallen so ill. As our senior audit manager, we understand that you still wish us to investigate and report our findings on the carsales.com annual reports and send them your way. All of us junior audit members have looked into the areas of the annual reports that you specified and will brief you on what we've found. We realised quite quickly after starting the audit that carsales.com are in fact who they say they are, the largest online automotive, motorcycle and marine classified business in Australia. They operate online, allowing consumers to buy and sell vehicles. The group principally operates in four business segments, those being online advertising services, data and research services, international business, and finance related services. Financially, car sales have disclosed a 10% growth in total revenue, increasing from $3.11 to $3.44 million between financial years 2015 and 2016. Majority of this increase arises from the 11% growth in online advertising, which increased by $24.2 million. Additionally, operating expenses have also increased by 10% as disclosed amounts of $157 million in financial year 2015 increased to $173 million in financial year 2016. Ultimately, between financial years 2015 and 16, car sales have had a successful 9% growth in their adjusted net profit after tax, with gains of over $101.9 million in 2015, elevating to $110.5 million in 2016. Car sales have also expressed in their annual reports clear gender diversity objectives to create an inclusive working environment for both diversity and operational performance. One objective is to continue to grow the number of women performing in senior roles from external appointments. In diversity education for managers, the recruitment shortlists have seen 42% of senior leadership appointments being women in 2015 grow to 50% in 2016. Additionally, car sales have promoted leadership programs for women to progress their careers. These female leadership programs and networking events have led to over 22 women in leadership roles in 2015 and has continued to grow with this program to now 39 members in 2016.
If we focus our attention on the carsales.com Limited statement of profit and loss and other comprehensive income, both of the figures are being stated in a single statement. The profit from continuing operations is $114,076 million in fiscal year 2015 to 16 and $170,167 million in fiscal year 2014 to 15. By comparing these two figures of two different years, we can see that the profit has increased tremendously. On the other note, the total comprehensive income for fiscal year 2015 to 16 and fiscal year 2014 to 15 is $112,369 million and $109,379 million respectively. The nature of the difference between the two figures in the two financial years have decreased and increased differently. This is due to the extraordinary event of the exchange differences on the translation of foreign operations and the non-recurring event of the share of remeasurement of net defined benefit liability of associates under other comprehensive income. It is reclassified to a profit of $2,212 million in fiscal year 2014 to 15. However, recorded as a loss of $1,707 million in fiscal 2015 to 16.
In 2019, there will be a new accounting standard that will be enforced, and that is called AASB 1.6. And what this standard is addressing is the current issues which they had with AASB 1.17. This is addressing the operating leases and the financial leases, and mainly the differences between those two is just the ownership. But what 117's issue is because basically only the expense of the operating leases were reflecting on the income statement, nothing would show on the balance sheet. This was having an effect on the key financial metrics such as the gearing ratios, asset turnover, and the EBITDA. The solution to this was AASB 1.6. With the new standard, it's particularly fond of the right of use of the asset, making those previous operating leases be recognised as an asset and a liability on the balance sheet. This covers virtually all major operating leases with the exceptions of a few conditions, such as less than $5,000. In Carsales' case, with the type of platform it is as a business, it's going to have marginal material impact on their reports. Mostly this affects the airliners, the retailers, mines and mining service companies, cruise ship operators, companies, and as Sir David Tweedy said, the former chair of the IASB, one of my greatest ambitions before I die is to fly in an aircraft that is on an airline's balance sheet. Clearly, there has been an issue with the AASB 117 standard, and that's why AASB 16 is going to be implemented. But in summary, it's going to have marginal material impact on car sales just because of the type of platform and what sort of business it is.
I'll tackle how Carsales handles their intangible assets and goodwill in particular. Referring to Note 16, the breakdown of intangibles is goodwill, computer software, brands and customer relationships, and lastly, other intangible assets. A reclassification of brands and customer relationships is a new for the company in 2016. Goodwill reclassification included net deferred tax effects and saw a $4,525,000 drop in value for goodwill itself. Carsales appear to be following ASIP 138 for intangibles and 136 for impairment, with that also includes standards such as ASIP 3 and 8. Carsales includes goodwill regarding net assets and acquisitions of the subsidiaries themselves. Gains and losses on disposal are calculated with the carrying amount of goodwill of the entity sold. Carsales use the standard definition of goodwill. In order for us to understand Carsales' impairment methods, we have to understand their cash-generating structure. Carsales have segmented their CGUs to represent their investment in each of their operating segments. This can be less straightforward where geography comes into play regarding segments themselves. The four segments are online advertising services, data and research services, finance and related services, and the international segment. These are used for the CGU determination. This is done to keep the measure of cash inflows independent of those from other assets or groups of assets. See page 75 of the 2016 report for more information. Amortization impairment criteria is as ASIP 138, 136. The RA is the higher the asset's net selling price or the value in use. The recoverable amount for these CGUs are determined by VIU calculations. The RA of the CGU uses cash flow projections which are based on financial budgets for a 5-year period. For anything beyond 5 years, extrapolation is carried out using internally generated estimated growth rates, discounted to cash rates. Carsales asserts that their management considers no impairment will arise from what they deem to be reasonable changes in key assumptions. Carsales' treatment only fits with a conceptual framework and relevant ASIP standards, but it's also good practice in general.
Before you fell ill, Mr. Ledger, you also asked us to look into the property, plant and equipment areas of the carsales.com annual reports. What is stated in the Carsales annual reports is that at the year's end, 30th of June 2015 and 2016, there was an overall increase in the net book amount of property, plant and equipment from $5.9 million to $6.6 million. It is important to note that these overall net book values regarding property, plant and equipment are made up of motor vehicles, leasehold improvements and plant and equipment. Carsales.com have also stated that these items are measured according to their historical cost less depreciation. An issue at hand is whether Carsales.com current methods do in fact provide a true and fair representation of the company's assets. While I'll try to keep my independence as an auditor, I feel like I must mention my concerns regarding whether Carsales.com should be using either cost or re-evaluation method regarding the measurement of their property, plant and equipment. While historical cost of an asset is often criticised for having no relation to the asset's current value, it is important to note that Carsales.com's assets, residual values and useful lives are reviewed and adjusted if appropriate at each reporting date. Therefore, assuming the residual values and useful lives of the assets are adjusted in good faith, the cost model currently used by Carsales can be considered to provide a true and fair representation of the company's assets. The re-evaluation method is similar in a sense of the adjustment of carrying value and improving accuracy in the balance sheet, but considering the ongoing adjustments to residual value and useful lives, the assets are likely to reflect their current market value after the adjusted depreciation.